So then thinking, if you go back and you say, we had a 5 out of 6 success rate on this trade, that is very high probability. How do you handle risk management on something like that? Because it seems like the higher probability, maybe you could risk a little bit more on that particular
Sure.
trade.
Absolutely. So part of that is also right now what we pretty much just talked about is like, hey, how do we identify a healthy stock and how do we know which ones are going to do well over a period of time? But then part of what we also do is we start using all these indicators and stuff like that. Is like when a stock is trending higher, and there's a series of higher lows, higher highs that it makes. Okay. And then when it starts teetering off, there's usually all kinds of patterns. We have a pattern that we call a hilltop pattern, where once that starts showing up, there's usually a chance to tell us, wait a second, this stock might start going sideways. Okay. Or we might have a candlestick that we call a right side candle. It's like, wow, when this shows up for the next 12 candles, chances are very high this stock is going to keep on going higher. And so again, so we first take the macro view of looking at what this stock is going to do on a bigger time frame. But then once we zoom into the daily or the weekly, which is the time frames that we prefer to trade, we don't go less than the daily time frame. But when we go into those time frames and we say, okay, now we're beginning to see even more patterns that are suggested based on what we know of these stocks that they're going to do something. The other thing we also do is there's a lot of things like as far as seasonality that people are not paying attention to. So it could literally be, hey, this stock right now, I just put on some trades where every time after earnings, like for instance, 1-800-Flowers, we just did that right now. Every time after earnings, if it gaps up on earnings and it has a follow through day, you can bet your bottom dollar that is going to go up for probably for the next 2-3 weeks. And now all we have to do is just go back to the monthly chart and say, is this a healthy stock or not? Because if it is a healthy stock, and then now we know that 1-800-Flowers after earnings, if it gaps up, because sometimes it doesn't gap up, but if it gaps up after earnings and then it has a follow through, chances are it will continue going up for the next 3 weeks. So this is where we start saying, I'm willing to take a risk with 1-800-Flowers as opposed to another time where maybe it didn't gap up after earnings and instead it gapped down. It's like, you know what? We're not interested in doing 1-800-Flowers this time around. That's where the quantitative analysis comes into play. Some people call it seasonality, but that's really what it is. They're just seeing, hey, what are the patterns here? And how many times does it do these things? And the idea here is if it's done it before to the point that, hey, you look back and say, man, I wish I had been in those trades. Well, when it happens again, just jump in.
Right.
Jump in. Don't second guess yourself. Because we get a lot of people say, oh, well, this time is different. And no, it's not. It's the same pattern happening again. Just jump in. We have methods of, placing stops and monitoring things. That's where the money management aspect comes into play. If you have good money management systems, you'll be fine. But the idea is we're seeing a stock that is ready to do something. It's done it before. Let's see, just jump in and see if we can do it again.
Yeah, that's really great way to stay on point with everything. So this has been some very good educational insight on the markets. And I think what I really picked up from this just in review is that getting that first step right is really critical. And so I want to thank you for sharing that. I think a lot of people will really be helpful. That will really help a lot of people with the H on the healthy stock. That's really good.